Hi, I just took a trade, and this is the proof from Mexi. As you can see, my name here is Senakofi, and it was a long, and I just won 189.14%. I'm going to show you how I took this trade, and if you want to be a profitable trader, I'm going to explain things so you understand and you can win a lot of trades with the strategy I used to take this trade. So basically, this is the daily chart of Bitcoin, and clearly you are seeing that price was in an uptrend, or price has been in an uptrend for a very long time. So if we say price is in an uptrend, it has a structure, and the uptrend structure is higher high, higher low, higher high, higher low, right? Higher high, higher low. So right here, it looks like this one, you can actually say this one printed beneath this, but someone could also take this as a low, right? Because from here this was a higher low, so from here you take this as higher high, and this could be a higher low, right? So clearly you expect price to again break this particular high, and I feel like price is going to break that high. Okay, so expect price to break through 124,000, right? So this is the daily chart. So clearly you can see from the daily chart that price is in an uptrend. Now the trick is, you see, trading, as the name suggests, or as the name goes, is basically an exchange between a buyer and a seller. Okay, so trading crypto should be exchange between buyers and sellers. Once you understand trading, the financial markets, and interpret it in that particular concept, you are going to understand the strategy I'm going to talk about. So the strategy is a very simple one. So this was the trade I took. So I took it at this point when price was at 112. So right at this point, 113. This is why I took the trade, and I took profit at 117,700, right? So yeah, so let me just do the analysis and then my understanding. So I was actually tracking price from this point. Okay, so this is what you do. If this is the 1 hour time frame, if price is in an uptrend, if you want to make money, you buy. Let me break it down so you get it. Now, when we say price is in an uptrend, it simply means that buyers are strong. The buyers have money, and the buyers are the ones pushing the market. So if you want to make money, all you have to do is to join the strong group. And if price is in an uptrend, buyers are the strong ones. Okay, so once price starts printing higher high, higher low, higher high, higher low, you know that price is in an uptrend. Okay, now that's the first thing. Now, how do you know where buyers are buying price from? Because yes, buyers are entering the market at very specific areas, around very specific regions. So if you really want to make money, you also join the market during those times when the buyers are joining the market. So in an uptrend, right, buyers join the market when a low is printed. So right here, the price got here, got rejected, came here, and then it printed a low. And then the low went up, broke this high, created a high, came back here, printed a low, and the low went up again, and all that. So buyers join the market during lows. So I want you to know this. Buyers join the market during lows. Now, Once you know that buyers join the market during lows, you study the market and anticipate where a next low will be printed at. Okay, and I'm going to show you the trick so you understand and you know what's going on. So you study the market and anticipate where a next low will be printed at. So allow the market to go. The market will go, it will get to a point, it will meet a resistance. Once the market meets a resistance, now allow the market to come down. Now, this is how you know that buyers are entering the market. So this is the 1 hour time frame. Okay, so let me just clear everything here. So you see how I was tracking the market. So higher high, higher low, right? So let's say this one you didn't take a trade here. Okay, let's say this one you didn't take a trade here. So higher high, higher low, you just mark out the low. Okay, and then once you mark out the low, you mark out where the market got to, and then it's returned. So right here, you realize that when the market got here, when the market got to this level, it's sort of returned, right? So you expect a reaction. You expect the market, because the market is in an uptrend, you expect the market to break through that region, and then you mark out the area where the market got to, and then it's returned. You mark out that area. So this area, the market got here, and then it came back down. Now, supposing you are tracing the market from this area, it broke through at this area, went and then got here, and then now it was coming back. Now, once you see about 4 red candles printed on the 4-hour time frame, that'll be 4 hours, right? 4 red candles printed on the 4-hour time frame, you should know that the market is returning, it is coming down. So once you see that the market is coming down, what you do is you switch from 1 hour to 5 minutes, right? So you switch from 1 hour to 5 minutes, and then you trace the market from where it got to. So at this particular area, okay, so at this particular area, let's trace the market. So at this particular area, the market got here, and this is the 5 minutes time frame, and the market is coming down. So you realize that even on the 5 minutes, the market was in an uptrend, okay, until it got here, and then it changed character. So when we say the market has changed character, the market has changed character, it simply means that it has changed from an uptrend to a downtrend. And how does the market change from an uptrend to a downtrend? It changes by breaking its recent low. So because it was in an uptrend, it was printing higher high, higher low, higher high, higher low, higher high, higher low. Here it printed higher high, higher low, and then guess what happened? This low was broken at this point. So on the 5 minutes, this low was actually broken. So there was a candle here printed beneath this particular low. So it tells you the market has changed character. And indeed, it was printing lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So you know that on the 5 minutes, the market has changed character. Now, this is how you get to know the areas or the region where the buyers are joining the market. So you trace the market and you trace the lower lows and the lower highs, right? So on the 5 minutes, clearly you can see that this was a lower high. When it got to this point, this was a lower low, right? When it got to this point, it was a lower low. Here it was a lower high. Okay, so the market is obviously, as you can see, printing lower lows, lower highs. So when the market got here, okay, when it got to this region, it printed a lower low, lower high. Now this low didn't go lower than the previous low, and then again, change of character, the market printed above the recent, it printed a candle above the recent lower high, right? It printed a candle above the recent lower high. So right there, you know that the market wants to change character. And indeed, it changed character over here. So once you see that you are using this line to track the recent, you should be tracking the recent lower highs, right? So once you see that you are using this line to track the recent lower high, and there is a green candle that prints above it, you know that the market wants to change character. So quickly, you take your trade from the candle that printed above the recent lower high, and then you can set your stop loss right here beneath the last lower low, and then if you like, you can set your take profit where the market got to and then it returned, because now the market has changed character. It simply tells you that it is going back to where it came from, right? And this will be a cool 1 to 3.39 risk to reward ratio. But if you realize that's not where I and I'm going to show you why. That's not where I set my take profits. For me, I set my take profits. So I took the trade from here and I set my take profits somewhere right here, right? I set my take profit somewhere right here. Now I'm going to show you why I set my take profit somewhere right there. And this is what this is how I knew that market was going up there. So zoom out on the 1 hour and tell me what you see. So look at the pattern of the chart. If you zoom out the 1 hour, if you study your charts very well, you know what pattern this was, right? So let me just show you. It was an inverse head and shoulder pattern, right? So inverse head and shoulder pattern is a bullish pattern. So right here, so this is an inverse head and shoulder pattern, as you are seeing here, right? This is an inverse head and shoulder pattern, and that was exactly, you see, the same thing, right? This one, okay, the same thing. This is an inverse head and shoulder pattern. This is an inverse head and shoulder pattern. Okay, it is a bullish chart pattern. So that was the same thing on the 1 hour time frame. So I just zoomed out and I realized that it had printed an inverse head and shoulder pattern. So the price was about to move up. Okay, so I just knew that, okay, so the last point where the inverse head and shoulder pattern ends, it's here, 117. So at least it will get to 117. So that's why even as I took my trade here, I could have taken my profit here, but I waited to take my profit here because the chart pattern also served as an additional confluence. So basically, that's that. Basically, if you really want to understand the trade, if you really want to take a trade, this you can actually use this strategy. So you just mark it, wait for the market to print, let it get to a region, let it get rejection, let it get a rejection. Once it is coming, switch to a lower time frame, track the lower highs, lower lows, lower highs, lower lows. Wait till a change of character. Once you get a change of character, you mark it, you mark the recent lower high, right? And then wait for a bullish candle to print above that recent lower high and quickly just take your trade. And then you can target the resistance point, right? The point where the market got to, and you're good to go. Very cool, very easy trading strategy you can use to trade anything at all. So this is me using that same strategy to trade gold, as you can see right here. So when gold broke this resistance, it went up, got to this place, and then came back down right here. It changed character, and then you just take the trade here to here. Good. The same thing right here happened, and it looks like the same thing is also happening here with gold. Okay, so right here, all you have to wait for, if you even want to trade on the 1 hour, all you have to wait for is to see that maybe the candle will print above this. Okay, or you can go on the 5-minute time frame. Clearly you can go on the 5-minute time frame and see what gold is doing right here. You see on the 5 minutes it's printing lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, right? Lower high, lower low, lower high, lower low. Okay, and now it looks like it's not printing any low further. So all you can do is just mark this area. Okay, this is a recent lower high, so you just mark this area and wait for a candle, a bullish candle, 5-minute bullish candle to come up here and print above this area, and you can just take your trade and you're good to go. As simple as that. So watch this video several times, make sure you understand, use it on anything. You can use it on stocks, you can use it on crypto, you can use it on commodities, use it on anything that is tradable. Even if it is your life and your life is tradable, use it on your life. Use it on anything, right? It's a basic knowledge you can use on anything to trade, to become a profitable trader. So yeah.